Hey, I'm Steven, and this is Solving the Money Problem. If you're new to the channel, welcome. And where have you been? The party started weeks ago. For the rest of you, welcome back. This is moving fast. Are we still seeing other people? As some of you know, today Tesla makes up over 80% of my stock portfolio. Just to be clear, I said stock portfolio. I have other assets too, like apartments, and my charm. Most of the remaining 20% of my stock portfolio comprises just 2 other companies. So in this video, I reveal my 3 stock portfolio and explain why if I had to build a stock portfolio from scratch today, it would be made of only these 3 companies. I've said in the past, I'm not a believer in diversification for its own sake. If you have no idea what you're doing, then sure, diversify. If you're petrified of risk, sure, diversify. If you have mouths to feed, then sure, diversify. I don't. And I'd much rather be making investment decisions from a place of confidence than uncertainty. So keep that in mind as you watch this video. These 3 companies share many of the same fundamental strengths, including scientifically literate founders, a clear disruptive vision for the future, aggressive scaling, no fear of failure, frugality and resourcefulness, exponential tailwinds, and massive data. Let's look at each of these strengths in depth. Wait, what's that? You want to know the companies now? Okay, fuck it. Amazon, Alphabet, well, Google, and Tesla. Let's talk about why. Jeff Bezos, Larry Page, Sergey Brin, and Elon Musk are gigantic nerds. Bezos is a Star Trek tragic. Musk is a meme lord, and I mean, did you not see Google Glass? These guys are total geeks, and this matters. Bezos has a degree in computer science and electrical engineering. Page and Brin were enrolled in a computer science PhD when they founded Google. Musk has degrees in physics and economics and abandoned a PhD to found his first internet company, Zip2. These guys understand the world from the atoms up, giving them enormous advantages over those who do not. With a scientific, evidence-based worldview and an intimate understanding of the exponential progress of technology, plus IQs a few standard deviations above average, these men are dangerously smart, see much further than you, and know how to get there. A clear disruptive vision for the future. It takes some combination of genius and madness to have the kind of disruptive vision for the future that Amazon, Google, and Tesla share. Each of them knows this is a long game. Almost every time one of these companies has declared its intentions to pursue an opportunity, they've been ridiculed and dismissed as crazy. Why? Because those who dismiss them lack the information, vision, intellect, or a combination of all 3. I'm not judging here, it's just true. If an engineer with 165 IQ says, "This is possible, I'm going to do it," it may be hard to believe if you're an average Joe who doesn't understand where the 13.7 billion-year-old hydrogen atoms in your body came from. Smart people who know science can see way further than the rest of us. It's easy to dismiss them as crazy and their ideas as ridiculous when you can't see as far or as clearly as them. This actually matters. The next time you hear an analyst share an opinion about the future, just remember, they might think the Earth is 6,000 years old too. Aggressive scaling. Imagine you're Jeff or Elon or Sergey or Larry, and using that gigantic brain of yours, you identify an opportunity. The opportunity is enormous and the time is ripe. To make the most of it, you must scale as fast as possible. Achieving scale is everything.
So you'll open as many square feet of space, physical space as you have to, hire as many employees as you have to
service customers, absolutely. And we'll do it as rapidly as we can.
That's a very cost-intense proposition.
If you're scaling as fast as you can, you're unlikely to be banking billions in profit. If you are, you're probably scaling too slow. Most analysts tend to be extremely short-sighted. These are the folks you hear crying in the corner when Tesla reports a $386 million loss for the year while almost doubling revenue, massively increasing production capacity, and charging infrastructure. Amazon, Google, and Tesla don't care what Wall Street thinks. They care about seizing the opportunity. Wall Street can sook as much as it wants to. Don't get it? Not our problem.
Amazon has never made a profit, not a dime. In fact, it lost $125 million last year. The company says it's investing for the future. Skeptics say it would have to sell every book being sold in the world today to justify its stock price.
No fear of failure. Fear of failure cripples as many individuals as it does companies. Giving 0 fucks is an excellent strategy for winning at life and at business. But it's difficult for most to do. It takes a lot of courage, and most people are beset with a crippling fear of failure. I could go deep into some Tony Robbins shit here, but I'll save that for another time. The willingness to experiment, to mess up, to take a loss, to embarrass yourself, to dust yourself off and go again, to be bold and innovate, to take risks, and to know you'll either learn or succeed, that is what drives disruption and sustained growth. There aren't many companies with bigger balls than Amazon, Google, and Tesla. That's why they see continued growth.
Here we are on top of our giant bowl of liquid oxygen. They say SpaceX has big balls, and it's true.
Frugality and resourcefulness. Every woman I've ever dated can tell you one thing about me. I'm frugal as fuck. I picture my life like a gigantic ship on the ocean. Spending money on dumb shit is like drilling holes in the ship's hull. Keeping afloat is hard when you're springing leaks everywhere. To provide some context, in my 20s, I earned a pretty average income. While I was investing aggressively in real estate, I kept my living costs below the poverty line while living in one of Australia's most expensive cities, Sydney. I slept on friends' couches, never ate at restaurants, and cycled everywhere, completely eliminating or drastically reducing my expenses. As a result, that insane frugality helped me scale my real estate portfolio quickly and build a great foundation in a growing market. Let's watch this 1997 footage of Amazon founder Jeff Bezos.
Oh, I've heard a lot about your desk.
It's a door with 4x4s.
Come on.
What?
I mean, you can afford a better desk than that.
It's a symbol of spending money on things that matter to customers and not spending money on things that don't.
According to my calculations, you yourself are worth somewhere in the vicinity of $9 or $10 billion today. I only say that because I've got a follow-up question.
Okay.
What's with the Honda?
This is a perfectly good car.
This is the kind of person you want running a growth company. In May 2019, Elon Musk emailed Tesla employees, stating, "It is extremely important that we examine every expenditure at Tesla, no matter how small, and be sure that it is critical. When making hundreds of thousands of cars, battery packs and solar systems, even a 10-cent saving could be worth over $50,000 a year." He continued, "That is why, going forward, all expenses of any kind, anywhere in the world, including parts, salary, travel expenses, rent, literally every payment that leaves our bank account must be reviewed, confirmed as critical, and the top of every outgoing payment signed by our CFO. I will personally review and sign every 10th page." This extreme cost-cutting at Tesla delivered a surprise profit in Q3 2019, blowing Wall Street away and sending the stock on a tear. Leaders who manage resources ruthlessly can do a lot with a little. This kind of extreme frugality and resourcefulness you want in a growth company. Exponential tailwinds. Another common thread between Amazon, Google, and Tesla is that many of their core products and technologies benefit from declining cost curves and exponential growth. Human beings don't intuitively understand exponential growth. Our ancestors evolved in a linear, relatively unchanging world, and as a result, our brains simply suck at understanding what's happening right now. Here's an example. If you take 30 linear steps, each 1 meter in length, you are 30 meters away from where you started. Question. If you take 30 exponential steps, meaning they double in length with each step, so 1 meter, 2 meters, 4 meters, 8 meters, how many meters are you from your starting point after 30 steps? No, really. Give yourself a few seconds, pause the video if you want to, and take your best guess. How many meters do you cover with 30 exponential steps? Have you got your number? Great. I'm about to tell you the answer. Ready? You walk 536,870,912 meters, enough to circle the Earth 13 times. These kind of non-intuitive answers are why scientific literacy is so important. It allows you to reach the correct conclusion instead of the intuitive conclusion. When people say things like, electric vehicles are a joke, they're only 1% of the global market, or Google will never make money from YouTube, that's their ancient brain talking. It has no place in this new exponential world. The cost of lithium-ion batteries is riding a declining cost curve. Internet usage is growing exponentially. Computing power is growing exponentially. The world's information is growing exponentially. Tesla's self-driving data lead is growing exponentially. I could go on.
Well, 3 years ago, I was in New York City working for a quantitative hedge fund when I came across the startling statistic that web usage was growing at 2,300% a year. So I decided I would try and find a business plan that made sense in the context of that growth.
Massive data. Data is the asset. One more time. Data is the asset. It's hard to stress just how important data is to these companies, and yet it's often an overlooked asset. For Amazon and Google, Customer data helps them recommend products or serve you relevant ads. What they know about you is everything. I mean, dude, how many of you are watching this video because YouTube recommended it to you? And since you're still watching, you probably liked it, which means, yep, the YouTube AI knew you would probably like this video. Data matters. Tesla is evolving into a serious software company with full self-driving as their flagship product. The self-driving AI is being trained via deep learning. These neural nets are being fed mountains of data to improve. That's how deep learning works. This progress is deceptive at first, but it's following an exponential curve. Just as it was easy to imagine Amazon becoming nothing more than a big bookstore, or Google remaining just a search engine, it's easy to overlook how valuable data is and how it can transform a company.
Now, every time I use your website, you learn more about me.
Yes.
One of your employees has said that you collect half a gigabyte, whatever that is, of information on your customers every day. That's about 350 floppy disks worth. What do you do with that information?
That's the data that allows us to predict or try to predict what, what books and videos and music that you would like, that you haven't discovered yet.
Amazon, Google, and Tesla are three companies who push aside intuition and actually look at the facts. This is rare. As usual, I have another 20 reasons I could share with you guys, like Google owning a massive slice of SpaceX, but these are some of the reasons why Amazon, Google, and Tesla combined make up 97% of my stock portfolio. They're scientifically literate, so they see further. Their vision is not of what is, but what can be. They prioritize growth over appeasing Wall Street. They give zero fucks about failure, knowing it's an inevitable part of disruptive innovation. They're frugal and ruthlessly resourceful. They're riding exponential tailwinds. They have enormously more data than everyone else. Now guys, this isn't investment advice. It's just a peek into my thinking and my reasoning. I don't see myself as a stock investor. I'm just an opportunistic investor. Since 1993, I've had regular internet access, and I've followed the stories of Amazon and Google since day one. I didn't go out looking for stocks to invest in. This is important. However, after retaining a curious interest in the growth stories of Amazon, Google, and later Tesla, and then taking a more discerning look at each as I became more focused on investment and financial independence, I realized that their success was no accident, that they were operating very differently to most other companies, that no one was seeing their true potential, and that the results would reflect this. That's why today, Amazon, Google, and Tesla are all I need, and why tomorrow, if I started a stock portfolio from scratch, they'd be the only three companies I want. Thanks so much for watching. Share your thoughts in the comments below. Any holes in my thinking? What's in your stock portfolio? And if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.